Good morning, good morning. Apologies, the stream didn't want to start on YouTube. It was YouTube rejection first thing in the morning. Welcome, everybody. Happy Tuesday. And on this episode of tradingsyndicate.org, it's kind of like a soap opera, isn't it? It's kind of like an as the world turns. As the short position turns, or the favor, the watch, and the very big short. Whatever you want to call it. What's going on? Raj, Ed, welcome to the folks on YouTube. Welcome to the folks in the room. Hey, Miko, what's going on? How you doing? Sydney, how are you? Well, let's go see what we're dealing with today. Yeah, remember there was that movie, The Favor, the Watch, and the Very Big Fish. It's like an 80s movie. I can't remember any of it, though. All right, so in our trading room, for those of you who are in our room, oh, by the way, I'm JJ. This is the tradingsyndicate.org. Welcome to folks who are joining us on YouTube. What we do here is we work tirelessly to help normal people make money in this sordid business that we call finance. And a little bit about me. I've been in the business for 34 years. I'm an executing trader, which means I'm the guy that nobody ever acknowledges exists. I'm the guy who sells stock for the insiders of public companies. So that's what I've done my whole life. I've always been a distributor. And so I have intimate knowledge of the system, how it works, and why certain things happen. And tonight, or today, we have basically stacking P profiles. Now, market profile people will know what I'm talking about. Non-market profile people are like, what is this guy talking about? What I'm talking about is 2 weeks ago, they said they were going to do something and we had a massive gap, right? Then we filled the gap. And then Sunday night, we had a gap and we filled the gap. So what we've done now is we've trapped short sellers here, right? And here, and here, and here, and here, and here, and here. So we have 1, 2, 3, 4, 5, 6, 7. We have 7 short positions that are obvious. Okay? So what does that mean? On any retracement, you should look for bids at these levels, right? So if we break, come back into yesterday's range and break 69.90, you'll look for bids at 69.70. So short sellers, that's your target, right? If we accept above the overnight high for some weird reason and do this, be careful shorting because we don't have a lot of swing highs left. So that tells us the other thing, not only for short sellers, people are, sorry, Ed. Yeah, when I execute, retail loses a lot of money, right? My clients go to the Bentley dealership, retail loses all their dough. It's not fair. Anyway, that's why I'm doing this, so I can at least get to purgatory. Yeah, so longs, right? If you're long in a market that is built on short covering, you're basically long in a house made of stilts, built on stilts. So what your job is to not totally buy into the fact that it's going to go higher, right? Make some money, right? Also, we have a Fed day tomorrow, ladies and gentlemen. right? We have a Fed day and we have month end. So we got all sorts of crazy stuff going on. You really, really want to trade less. Remember, month end is all about keeping the money that you made, right? That's the whole trick to this business, right? It's one thing to make money, but can you actually keep it? Are you going to give it all back because some crazy fool told you to do something on Twitter? No, you're not, right? Because you're a professional and you're doing business. Okay? So, if you're long, be cautiously long. If you're short, that's cool. Just make sure if your seller goes to get an ice cream cone that you're not hanging out in the wind with your pants around your ankles. Know what I mean, Jelly Bean? Okay, it's not bad being short. But if you're a short seller and you lose the seller that you're riding the market down with, because let's face it, you don't have the firepower to push a market down. You're not long 20,000 contracts. So when the people who are long thousands of contracts stop selling and lift their offer, you better watch your whiskers, okay? What does that mean? It means cover, or at least reduce your risk with size, right? This way, if a big buy order comes in, these markets are thin. Tomorrow's a Fed day. Nobody's going to be putting on size unless they have to, right? This is business talk. This is not retail mumbo jumbo. Okay, this is business. This is how the business works. So if you made money at the end of the month, you want to keep it. That's how the business works. So nobody's going to initiate huge positions. So don't think someone's going to come bail you out. Okay? The other thing I want to talk about really quickly, I was talking to one of my guys and he said he's been watching the news over the weekends and he gets really, really sort of depressed and he just keeps shorting the market. And I think that happens to a lot of people when you get stuck in a news cycle. Ladies and gentlemen, you really have to pay attention to these charts, not the news. Okay? Don't let the news influence your well-being. Because what happens is you start trading badly, you start losing money, you start getting frustrated, and if you're old like us, right? If you're old like I am, you are really don't want to get stressed out by taking stupid trades. Okay? Because the more stupid trades you take, the more stressed out you're going to get. The more stressed out you get, the more stupid trades you're going to take. It's just a never-ending cycle. So don't do that. Okay? That is my public service announcement for month end. Yeah, that's the worst thing. You got to have a seller. Like, let's look at these candle charts. And I haven't traded this. I mean, look at this. This is horrible. This looks like a barcode on a box of cereal, right? I mean, it's tradable if you really put your mind to it, but I just didn't have it in me today. You know? It's a 3-point balance. And now they're futzing around on VWAP right at yesterday's high. And you notice usually by this time, you get a little bit of a push up or a push down. No, it's stuck. So what's your trading plan for the morning going to be? Okay, people who are thinkers, right, are going to watch and see. I am short biased, of course. So I'm looking for a move down to 91 because overnight inventory is very, very long, right? It's probably 98%, 95% long. We should have some sort of a correction lower. So for example, if you are short, say you're shorting right here, right? You know, you're selling the bid, you're selling the offer, you short a couple at 95.5, you put an offer out at 96, 97, right? Say you're short here. You can see there's a bid at 94, right? There's a bid right here. That bid's been there for about 45 minutes. We're coming in and testing that bid. So if you're short, that's cool. Your reference is the overnight high. I mean the previous day high. If we stay under VWAP, if we stay under the previous day high, you're golden. If it starts crawling its way back up here, start reducing your risk with size. Know what I mean? You guys with me? You understand what I'm talking about? It's simple. Right? Your seller is here. If your seller moves up here, that's your warning level. If your seller moves up here, there's another warning level. For those of you who are daddy warbucks and want to use a big stop, I'd use 99 3/4. Right? But I'm cheap. Right? I lose my seller. Say I'm short 95.50. Where am I? I'm short 95.67 on 3 micros, and I just covered one. Right? Because I don't like the way it's trading. Right? So I'll stay short too, and my out will be 97.5. Right? And this is the micro, and this is the first trade I've taken. So now I've paid some money to find out where the bid is. I'm still short 2 at 95 3/4. Right? Right? It's that simple. And if you don't think it's that simple, that's fine. Now, where should I put a bid? Right? They've been bidding, what is this, 94.5, 90. Let me go. I'm short 2 at 95 3/4. I'm 94.5 bid. I'll call that a lookout bid. Right? If I get hit at 94.5, right, I've got another buy order at 93 3/4. I should actually go, I'll go 94. I'll front run it. Right? Now, if I can't buy one measly contract at 94.5, and it starts getting up over 96, 96/4, then I can automatically go, oh, you know, this trade's not going to work out, and I'm probably going to have to scratch it. So I'm mentally prepared to take the loss already. Right? So I'm not going to have a big hairy fit if I get stopped out and the trade doesn't work. Because then I know that there's a bid at 94.5 and not to short it down there. Right? Maybe when the market opens, that's where I can go long. All right, I'm going to slide my bid up to 94 3/4 because I am not seeing a seller that is desperate enough to push price down yet. Let's see. So this is how I test the market out. I'll put on a trade and then I'll watch the fill to see whether or not, hey, I got a fill. Beautiful. Right? I'm going to move my next bid up to 94.5. I'm filled on that. So there you go. Right? So there was a seller. Now that's the first trade I've taken all day. I did it with the micro. So, hey, look, I'm not going to be buying drinks tonight with that. That won't even pay for parking. But all that does is it gives me information. And that's how large size traders trade. They go and poke around and put their fingers in the dirt to try and figure out where the buy orders are. Because what you see on a chart and what actually happens on transactions, right? It's like, you know, I'm trying to sell this car for 25 grand. Well, yeah, no, you know, they're selling for 20. I can buy one at 20. Why would I buy yours for 25 grand? You guys get what I mean? It's commerce. Now, if I was short a few more, I'd have a 94 bid. Remember I had that 94 bid in? You know, would that have gotten hit? I don't know, right? Until I actually go put one in. Does that make sense? Boom, it got hit. Okay, this is normal, right? This is normal market behavior. The inventory is correcting slowly, very slowly, right? Kind of like maple syrup running down a tree in the forests of Quebec. In winter, very slowly, it's kind of running down. But it's still going. So let's look for bids at 61.91 because that's where one of the short positions that's very obvious in tonight's profile. So if you're short, this is good. Now, everybody who's long above 65.95 half, they're not happy, right? And they're slowly starting to bail, right? They're starting to sell. So for those who are buy the dip people, this is not the buy the dip time. Wait till it sells some more, right? Wait until the selling, till we see how much selling we're going to get. Hey Josh, what's up? How's Calgary? See how slow it is? Thanks, Ed Marie. Ray and Steve did a lot. They really did a lot of work on that. I was hugely happy to see how much work they did. That's all them. I had no part in that. They did that, and they did an amazing job. Eating coffee. Yeah, there's a lot of short buying, right? So the shorts come in and buy, then they drop their bids, then they raise their bids, then they drop their bids, right? And it's like a tango right now. Shorts want to buy as cheap as possible. The longs are like, let's see how desperate you really are, right? And of course, this is all being done electronically now. Yeah. We'll see here. See how they're front running 91 half? Hey Abjeet, how you doing, brother? So, had I still been short 95, I'd probably, as we get closer to the open, I'd cover. That's just because I don't like being in a position when the market opens. Just in case. That's just me. I'm always my first priority is always risk. It's always risk. Very boring. Very boring. But I don't need any more heart attacks. Okay, so no gap. That's good. That's good. Good distribution too. How many contracts? 134,000. So they moved off some paper before the open. That's nice. It's always lovely to make some money before a market opens, isn't it? Right? You're cashed up. They were long inventory here, ladies and gentlemen. They were long inventory at 68.90, and from yesterday. So that's where their inventory was priced. So they got to sell that inventory up at 69.98. See, there's yesterday's point of control. And point of control is just a fancy way of saying this is where 70% of the cost basis of our stuff is. Right? So 70% of our inventory is priced here, right? And tonight we sold a good chunk of it, not all of it, but it's always nice, like, if you were long 10,000 contracts and you got to sell 1,000 or 2,000 or 3,000, you can lighten up that inventory a little bit and get some cash, right? That's the name of the game, is to turn inventory into cash. Now look at this. We found a bid. This is pre-market. What's going on is there's some people who are going, crap, right? I've got a bid for 100 at 92 and it's not getting filled. So I'm going to have to creep my bid from 92 to 93. And then Ed goes, oh, hell, I'm going to pay 93.25. And then Anne-Marie goes, to hell with you guys. I'm going to go 94, right? And then retail takes the offer. That's when you see your delta go up, right? And then boom. So let's see, right? Now the sellers sold into it right before VWAP. That's good. That's normal. Hey, Chadwick, how you doing? So that's normal. This is nice, normal pre-market behavior, right? As they say in France, it is doing as nature intended. All right, so when we open, do we take out the low of X and fill these single prints? Or, for some weird reason, do we get enough buying to get back over yesterday's high? Which would be very strange, because there's all of this supply up here that's trapped long. We have a seller here now, and we have a seller here. Next candle will open in 18 seconds, and you'll see the seller's underneath 93.75. And if that's happening, right? If that is happening indeed, then you know the sellers are competing and pushing price lower. So if you were a short seller, you'd want to initiate a short if we stay under 93.75. Do you see how it just went underneath and came back up? So it's kind of messing with us, right? So you don't have to trade this. What I prefer to do is I've taken a couple of scalps, or if I take a scalp and one works and one doesn't, okay, let's see what the large traders are going to do, and let's see who comes into the store when we open the doors in 2 minutes. Does that make sense? You guys okay with that? Sometimes, because we don't control the order flow, we have to sit and watch and wait, right? And, a lot of people find that really annoying, but hey, that's the way the business is, right? So, something to be aware of when a market opens. See, look, buyers are coming in the door. Before, like they bribed the security guard to let them in, you see? Hopefully you guys this helps visualize, because people have a hard time visualizing what happens in a market. Hey, there's our friendly neighborhood crypto market maker. What's going on, Pollux? What's the 0 and 1 Mafia up to today? Where's the coin of bitterness? $88,159. All right. Still in this holding pattern in this cost basis. So we have sellers here. 96.25 are the sellers. So we got the market mapped out. We know where the sellers are. We know where the bids are under 92. Let's open this puppy up and see what shakes out. Yeah, Bitcoin's building a new cost basis. It's holding that April-May cost basis of last year. So for longs, that's comforting. Alrighty, and off we go. Seller at VWAP. Now, where is the seller? Where is the seller? There's a seller at the open. They're lifting, and they're lifting, and as we come up to 96, there's the first test. Right? First test is 96. I'm short 1 micro at 93 3/4, and I covered it at 92 1/4. Not the greatest trade. Just checking to see if my brain is working, because I saw a seller. Now, if you're short, we went and filled 2 of those single prints. See, there's a box of buyers here. Found the buyers, coming back up. Now let's see where they sell into it. Ooh, lifted above VWAP. Interesting. Now, do we have that seller at 96 1/4? Going once, going twice. Actually, they stepped down and sold 96. All right. Candle's not over yet. But the sellers seem to be stepping in, right? We're offering under 93 3/4. If we stay under 93 3/4, there is a likelihood we'll come back into those 90s and fill these singles a little bit. But if that offer lifts, right, and it's choppy, so you don't have to take a trade. Let it open and just chill, right? Just relax. Watch the offer. Watch 93 3/4. We got 2 seconds. Now, if that offer doesn't lift, look at the candle. Here it goes. It goes 93 3/4. Is there a seller there? Right? Oh, it's choppy. And the fills aren't really great. Right? Short 93 1/2. Oof. That is not good. Not the greatest fills. Oof. Made 3 ticks on that. It's choppy. It's really choppy. So I've taken a couple of trades. Test this out. There's a bid down at 92. I'd like to give it some more time, though. Right? I did, Mihai. I apologize for that. I forgot about it. You told me last week. But you have to remember I still had the flu. So I was a little kind of out there on Pluto. I will look at that again, though. Thank you. My brain is just coming back online. Pretend Windows did an update. You know, I had to kind of defragment my hard drive after the last 2 weeks. I tell you, man, I was not the smartest. I was not the sharpest knife in the drawer when I had the flu. I'm sure I forgot to do a lot of things. Okay. See how choppy it is? Now, I don't know if anyone's trading this. I've poked at it twice. And there's really not a lot of interest right now because we have a Fed meeting tomorrow. Nobody's like, oh, let me go and buy 5,000 contracts just for the hell of it. No, nobody really does business like that. But I do see bids at 91. We have supply overhead. We have shorts underneath, right? Clowns on top of us, shorts trapped underneath us. Here we are, stuck in the middle with you, just like a song, right? That's why it's like this. And nobody wants to do anything because tomorrow's a Fed day. So just relax, right? If we were on the trade desk right now, we'd be throwing paper airplanes at each other, trying to figure out what we're going to do for the weekend. You know, see if that 96 quarter seller is still there. Yeah, they're still there. See? I drew that little white line there 6 minutes ago. And look, there they are. Well, all that means is if you're trading this and you're long 94, you probably want to sell 96 because somebody else is going to. Right? What are we doing this weekend? It's only Tuesday, I know. You know, a slow open means, you know, maybe a food eating contest. You know, once the customer orders are processed, you know, pay one of the interns to see if he can eat 25 donuts in 2 minutes. You know, yeah, it feels like a Friday. Now, traders will gamble on anything, those guys. They'll play poker, they'll bet on anything. Chugging milk and throwing up. All right, let's go test that 91 bid again. Ooh, the excitement never ends. Back into that little green box. See, every time we come in there, the shorts come in bid. Eventually, if we hang out here long enough, the people who are long will start puking more. Yeah, that's actually a pretty bad one. I've heard about the gallon of milk thing. They never let us do it in our firm because they didn't want to clean up the puke. The owner was too cheap. This is like I started back in the day when people could smoke in offices, right? So one of the owners of a brokerage firm, his name was Ashton, and we used to call him Ashcan because you'd go into his office and it'd be like smoke. You'd have to like wave the smoke out of the way to see him. Yeah, the good old days. Golly, look at this. Oh. So the only people who are making money now are the wholesalers. Oh, I've seen all sorts of weird brokerage firms. You got to remember, Anne Marie, I was on the fringes of the business, right? Just we were outlaws. So there were some firms in Long Island. I am writing a book. I got a couple hundred pages. I got to finish it before nobody wants to read it. Uh, we're in Long Island. We go to this firm. No, this was in Astoria. And it was like a grocery store in the front, and you go through the back of it, and it's a trading floor. It was just like everyone was smoking. It was just full of smoke. High pressure boiler room. Something else. Yeah, I remember smoking on airplanes. So if you're short, that's wonderful. right? You got patience because those candles, the tops of these candles are lower. Now, if I wasn't telling stories, I should have been short. But I didn't want to short the single prints. Right? I got to work on my discipline. There's one single print left. Now there's another set down here. We had 4 obvious short positions. Totally. You know, it's like an ethnic grocery store in the front and the back is a boiler room. What a hoot. Ah, good times. So when we're coming up to 91, 91 and a quarter, let's see if those sellers are still there. Big green short covering candle. It's going to be sellers at 92. There they are. I feel like I'm doing announcing for golf. Big green candle. Look at that. All of a sudden, so that was just a couple of sell orders that took us under 91. They sell into it at 93. I'm seriously still short biased. Let's see what the next candle does. If the next candle stays under 93 and 3/4, we could take another short. Put our stop at 94. VWAP kind of area. Oh, bastards. Okay. So all of a sudden, the seller just went away. Right? UNH. Is that what? United Healthcare? Wow. I was not expecting that. I was expecting a seller. But let's see if we stay over 93 and 3/4. If you are long, put them out at 96. I bought a couple at 94. And so I took the short. I got stopped out. I flipped along. Right? Sometimes your stops will tell you, hey, buddy, you're getting on the wrong train. It's like once I was in England and I got on the wrong train. Thank God the guy told me I was on the wrong train right before it took off. No, I'm short biased based on inventory being above a SIG's capital. My bias has nothing to do with macro, right? I see inventory, I see trapped longs. But if the market starts getting over these levels, then my short bias goes out the window. So because I'm a wholesaler and a seller of other people's stock, right? Clients, investors, I've always been short biased. But in these markets tend to run out of supply just when everybody gets short. It's very annoying, right? And it happened to me right there. So I was testing the shorts. I took a couple of shorts using the micro because I'm testing the market. Also, I'm testing myself because I had the flu for 2 weeks and I didn't trade. So I'm just back trading this week. So I'm just kind of dipping my toes in the water to see if my brain is working because I don't like losing money. I have a moral, I find it immoral to lose a lot of money. So I'm very cautious. So we have a seller at 96, right where the white line I put is. And the bids right now have moved up from 90, 91 to 93. Let's see if that continues. Yeah, it's normal to be short biased when you see an obvious short squeeze, right, Ed? Right? It's like, you know what it is? You know what like a P profile is? You were a cop, so a P profile is like you watching a 16-year-old on one of those really fancy sport bikes doing 200 miles an hour down the highway. It's kind of only a matter of time before that ends badly, right? So usually when you see a P profile, you know that the only thing holding the market up is that short bid. So you're short biased. But when you're trading on a smaller time frame, you got to really pay attention to the offer and the bottom of the candles and the top of the candles. Right? Now they're telling you, okay, it's slow because it's choppy. But if you see that there's a bid and then the bid moves higher and then the bid moves higher, longer term you might be short. But in the meantime, like right now, right, the order flow at this very instant is not telling me to be short. And that is one of the hardest things I've had to figure out. Because 3 or 4 hours later, the market might collapse. But at this time, at this present time, the market is telling me that the bid is moving up. Right? Even though that there's a bunch of inventory over 98, it's kind of sticky. Right? It could be because most of the inventory over 98, now that I'm thinking about it, was short covering. So there's really not that much overhang. It's not like we sold 200,000 contracts to the longs. So if it traded 200,000, maybe 100,000 of that was short covering because it's right above yesterday's high. You see how I'm kind of thinking it through tactically? But I'm not just thinking fancy thoughts because the chart's agreeing with me. You see? So that's how you kind of use structure to make sense of the order flow. Because it should be falling apart, but it's not. How come? Right? Because it takes longer to trap more people to create resistance or that downward pressure. The more people we can put on this boat and then drill a hole in the boat, right, then the boat's going to sink faster. But right now, the boat doesn't have enough people on it. So let's load up the boat with as many people as we can before we drill that hole in the bottom. Get what I mean? If you were like Snidely Whiplash, you know, like the evil guy from Bullwinkle, right? You know, the villain. See, look, the offer is lifting. Next sellers are going to be 97, ladies and gentlemen. So even though I'm short biased, I can't trade short because the market's telling me, psst, psst, buddy, why are you shorting this? There's buyers. What are you doing? Right? Now, if we accept back over the previous day high, we're going to go back and forth like a vacuum cleaner now, scrubbing this thing, right? So there's a seller at 96, 97. See how we came in? We hit this white line to the tick, right? Look, sellers are there. But once we see the offer, the red line, you see the red and green line, they move together. The red line is the offer. If that starts moving higher, that means the sellers are raising price because they see buyers. Right? You're the only guy selling water at the beach. You know, it's 30 degrees outside and it's hot. Right? Now, instead of charging $1, you could charge $2. The offer will lift, the bid will follow. Remember Angelo Dundee, kill the body and the head will die? What he told Ali? Right? Follow the offer. The bid will always follow the offer. Buyers will follow sellers up. And then when those, see? Watch the offer. Don't worry about the bid. Just, we'll take care of the buying. You keep your eye on the seller. So the trick is, you want to go long when the offer is lifting, and you don't want to be short unless the offer is moving down. Now, when the offer starts moving down, it means nobody wants to buy it at 96, 96 and a half, 97. So we got to put it on sale. And when we put it on sale, bing, that brings in buyers and we can lift the offer again. That's why you'll have green candle, red candle, green candle, 2 red candles, green candle, because that's putting it on sale, right? This is, look, folks, this is a hot product. You didn't buy it here, you didn't buy it here. When we put it on sale here, you better come buy it because we're going to take it up here, right? attention Walmart shoppers, for the next 20 minutes, right? Jimmy Dean Franks are going to be on sale 2 for 1, but only for the next 20 minutes. Get them while they're hot. See? Should have bought it at 96, my friend. Now I got to sell it to you at 98. My boss is going to kill me. What am I going to do? It's a market, folks. Now, all of that colorful stuff is gone because it's all done electronically. But the business never changes. It's just much more efficient now. And all you need to do is watch the 1-minute candle chart, and it tells you everything. Right? Now there was a constant seller here for hours. Right? Before 99 3/4. Now, what is going to happen when we go tickle that level again? You have to ask yourself, how many people shorted here in the last hour? If enough people shorted under 99, we're going to go hit 7,005. And we'll go through 7,000 like a hot knife through butter. It's all about leverage, my friends. The more people who short a market in cost basis, the higher it will go when the people who own it all start to raise price. It's commerce. If you think of trading as commerce, which it really is, instead of all this other crazy stuff you guys come up with, right? It's a simple business. Let's see if that seller at 7,002 is there. Now think if you were short 96, you added to it at 98. Now you're getting bought in at 7,002. This, my friends, is how markets work. If you learn how this works and trade alongside, had I bought more contracts, I would have been selling into this strength. But I took that short, I got stopped out, and the market went, buddy, that's not the way to go today. Right? Sometimes you gotta pay a little in business to figure out the information. That's why I trade with the micro when I first start trading or after some time off. But I always start every day trading a cheaper price product. So if I screw up, right, I keep my business costs down. Right? I don't need to lose $300 to know I'm not trading well. I can lose 30, 40 bucks. I'll be happy with that. Right? Once I'm trading well, I'll switch to the E-mini. Right? That's smart business. Then that's how you stay in business for decades. Right? Instead of blowing up accounts, right? And doing all sorts of crazy stuff. Right? Beware the old trader. Because, there's a reason why we're still here. Looking for 7,003 3/4, which is our next upper stop. See, you can see there's a seller. Boom! There we go. Right? So how many people do you think are short under 69.99? I'd say quite a few. And they all realized it at the same time and went to cover. Overnight high to the tick. You guys see that? I hope you guys took the opportunity to go long. So we've taken the cost basis. Now we're at the top of 2 times profit. And then we go from 2 times profit to 4 times profit. Because it's a market. So as a trader, you need to know where your product is priced so you can make intelligent business decisions. Right? Trades are business decisions. They're transactions. And you need to know how to transact intelligently. And how are you going to transact intelligently unless you know where your inventory is priced? Right? They're going to backfill this now. You can see that there's a seller here. That's 6.5. Right? So it's coming back down. If you are short, your stop is going to be here. You don't want to spend a lot of money on a stop, right? Especially in this creepy price action. So if you're short here, your stop is 6.5, right? And if that offer comes up like that, then you're stopped out, no big deal, right? It's very hard to short a market when the inventory is all below us, right? I'm not a breakout trader, but I think if it holds, say 7,007, 7,008, the next target's going to be 10. Where's our upper stop? 7,010. 7,015 and a half. 17 and a half. And then we're back up here at all-time highs. So if we accept over the overnight high, ladies and gentlemen, be careful, right, if you're shorting. Okay? Right? Very strange. You know what I didn't do today? What were the early morning earnings like? Nobody's talking about that stuff. Is my microphone working? You guys still awake? Anyone there? I stopped streaming? Oh, okay. Just checking. Just checking. You guys have to remember it's 3 o'clock in the afternoon here in England's greatest city, Liverpool. And you guys are just waking up. So apologies. I could be a little wired. Hey, Real Cryptomania, how you doing? Good, good, good. Now we're into the annoying distribution, right? So now we're going to take the product that was all underneath 99, sell it at 7,006. Glad you're doing well. Glad you're doing well. Okay, we got a seller. Yay! I'll wait till this next candle closes before I get too excited. So if the next candle opens and stays under 5 3/4, we might have a short. Or if you are short, that's great. Now if we rip up over 5 3/4, 6, not so great, right? Need that seller to step in. Oh, starting to lose the seller. See? News? Oh, good. Maybe that'll shake something loose. Right, and the seller came back here. Right there. So I'll wait till the news passes before I attempt to trade. This way you don't overtrade, you don't get upset. Consumer confidence. Oh, it's okay, Bull Hunter. That's nothing wrong with talking about silver. I was just actually going to go look at the metal heads to see how they're doing. You're not getting any inventory correction at all. There's a little bid right here. Gosh. Shorted 5.5. Tried to cover 4.25, but I had to buy it back at 4.75. Not a good trade at all. It's just so sticky, right? Now you might be asking me, why am I taking these shorts? Well, I'm taking them to see where the bid is. I'm paying for information. Well, I made money on the trade, so it's not that big a deal, but that's why I'm taking these small little crappy little trades, just to see if the look above and fail is working, and it's not. So when when you trade that way and you can find the bid, once you find the bid, you can work off of it. But I need some more clarity now. I don't like going long in distribution. I don't like shorting it right at the lows. So I don't really see a trade just yet unless these candles start putting in lower highs. What a choppy mess this is. News didn't really do much, did it? Got a seller at 5.75. It has nothing to do with psychology, actually. That's a very good question. It has actually nothing to do with psychology. It has to do with business. You see, real traders get information by transacting business. The transactions give you feedback. A candle is great, but a candle doesn't tell you how your order is going to be filled. A candle doesn't tell you whether there's front running. Because a candle will show you a trade at a level, but you could be bid at that level and not get a fill. You could be offered at that level and not get a fill, but the candle will trade there. So in your mind, you will think that that trade works. But when you go put it on in real life, you'll see that it doesn't, because the order flow is just subtly different. Does that make sense? So my trading has no psychology in it. My psychology is practical, right? I use the transactions to tell me whether or not what I think is happening is actually happening. If I go buy something at $1, thinking people will pay $1.25, and I put it for sale at $1.25, and it trades at $1.25, but I look at my account and those sell orders are not being executed. That is the actual real world of order flow where no simulator, no chart can actually tell you what's really going on in the business until you go stick your fingers in it. And then once you do the transaction, you know, right? You know the order flow. You see? Because what you might be thinking and what's actually happening are two different things. Oh, here, I'll give them to you, Charles. Stay with me. No problem, Charles. So we finally had enough selling to come right back to the cost basis. I missed that trade. Ugh. Nice work, Badir. Nice work. Now, can we take that B low and drive it down to yesterday's high? Can you see, ladies and gentlemen, the shorts are bidding there. That's why we stopped before VWAP, right? Anyone who was short here started buying it back here. We stopped right at cost basis, right? So now we need more sellers to show up. Will they show up here and here again? Let's wait for the next candle. So the other thing is that we could be in a rotation where the market rotates in this box, right? And you'll see the market go up to these levels. So we're looking to see if there's a seller at 7,002. And then just around 3.5. Saw the covering a mile away. Beautiful. Beautiful. That's exactly what we want. And we are still in distribution. We are still distributing the inventory from yesterday up here for profit. You see? Okay. See, we were underneath the previous day high. How long were we underneath 69.95? Not for long. We still have not corrected overnight inventory in any kind of significant fashion. Okay, overnight inventory to correct would have to come down to 97. 69.77, sorry, not 97. And this could be a big rotation. Eesh. See how easy it is to get trapped short falling price? Badir shorted, covered. Some people went long. Well, it's just made to only go up. Market's not made to go down. You got to look at how it's created. So if we take out that 7,008-9 area, right? This market's created to install investor confidence so people are comfortable buying stock and putting it away. If I told you, hey, invest 100 grand in this, in 3 years you're going to owe 600 grand, who's going to fall for that? Good distribution up here. If we don't get underneath 7,000, careful on the short side, my friends. Let's see. If we get a rotation, that'll be nice. We can go back and forth. It is a poor high, Ed. I mean, Jag. Sorry. Thank you. Should have been short. So if you're short under 7,005, make sure you put your bids in. Put your bids in because your bids will tell you whether or not you have to move your buy orders up or whether you can leave them. Right? So if you're short at 6 or 5 and you have a bid at 3 3/4, 3.5, and it doesn't get filled, well, you're going to have to pay more. Right? Otherwise, it'll rip on you and you'll get stuck short in the hole. Right? So those of you who are joining us on YouTube, thank you for being with us. The room we have is called tradingsyndicate.org. I'll put the link in here. We're the only trading room that has an AI that works, that's decent, you don't have to mortgage your house to learn how to trade. Come hang out with us, we'll teach you. It's less than going to Starbucks twice. We'll show you where the sellers are. We'll show you when to take the trades, when not to take the trades, how to do proper business, right? Instead of mucking around, blowing up accounts, getting stressed out, right? Let us help you manage the stress of trading. You don't need trading psychology. You need trading instruction. See you, Badir. Have a good one. I don't know. I haven't been to Starbucks in a while, Anne-Marie. I'm kind of scared to go into that place. $35 for a pumpkin spice latte. Which doesn't really sound that appealing. I don't know. They've got some strange drinks in there. Yeah, that's right. It's $19 a month in the room. That is cheaper than going to Starbucks. I still remember one of my buddies when the Starbucks opened in Vancouver. It was one of the first in North America. There was Seattle and Vancouver. My buddy came to visit from the prairies, and I took him to Starbucks, and there was a sandwich. He goes, they give him the coffee, and it was like $6, and he goes, he's looking at the lady's like, "Can I help you?" And he goes, "Yeah, where's my sandwich? I thought I was gonna get a sandwich with this." She's like, "No, that's just for the coffee." Oh, anyway, choppy, choppy, choppy. Man alive. I think there'll be better trading later. We need to build up some serious inventory. If we get another P profile today, I don't know. I don't know. We might. Thank you, Anne Marie. I appreciate it. Let me know who they are so we can welcome them. Oof. See, if we don't take out 98, what'll happen is you'll get another P profile where the shorts are trapped under 69.98. That could happen. We could just go sideways between 98 and 7,006 for hours. I don't want to put that out there in the universe, but that possibly could happen. Right? P profile, P profile, P profile. It's a little early. So there you go. Very frustrating. And if the Fed meeting turns out to be kind of a non-event, just be careful because it is month end. And nobody likes a down month end. Right? Everybody wants the month end up. So asset prices look good, people are happy, clients send more money, people buy more yachts. Guys are really quiet. Quiet like the market. When there are single prints below, do you short and sell to the trap shorts when the price gets close to the single prints? No, if you short, that means you sell something you don't own. So what I'll do is I'll short, and then when it gets to the single prints, I'll buy above the trap shorts because I know that's where support's going to be. Wednesday, Pollux, we'll do let's do an execution class tomorrow at 11. I'll put out an announcement. And we can talk execution. That'll be tomorrow at 11. I've had to cancel the last 2 weeks because I was sick. So, yeah, let's get at her and work on that. Get that going. That's a good checklist. That's a good checklist. Eleven Eastern. Yes, Ed. 11 Eastern. This is really slow. Okay. I guess we can just kind of chill out. Let's go look at some, let's see what the cool kids are doing in the land of equities. What's going on there? They're not posted? Where the hell did I post them? Charles, just scroll up, man. There you go. Didn't I post them? Oh, I must have posted them somewhere else. Whoops. I think it was early when I did it. Thanks for letting me know. Apparently, I still have some of the flu. A little absent-minded. Gosh. Ugh. Alrighty. Creeping up over that overnight high. Careful if we accept. Nice work, Charles. Nice work. It's a boring market. Pretty normal before a Fed day. Pretty normal before a Fed day to have a boring market. That's okay. Oh, I'm kind of boring myself today, so it's all right. Poor high is still holding. Hey James, how you doing? Well, ladies and gentlemen, yeah, be careful shorting a dull market. No kidding. Gold. Apple 261.67. What's our high today? 61.95. So remember in Apple, there's going to be inventory above 266.77 going into earnings. Oh, Microsoft back over 469. You can see this way I look at markets of cost basis. It really helps you put together trades where you don't have to, you're not buying the top because you know it's at 8 times cost basis, right? Yeah, nothing really big going on. UEC looked above 18 and back down. Good for them. They hit $20. Beautiful. Beautiful. Good for them. Been lugging that deal for 2 decades. Gotta really admire that. When I say accept, it means that the price accepts over this price. So I say if it accepts over the overnight high, that means the price goes over 7,006 and stays above it. That's about it. Now, market profile people make a big deal about this, right? No, Rejon. Do not watch the DOM. Do not pass go. Do not collect $200. No, do not watch the DOM. It is a massive waste of time. Most people who teach DOM trading have actually never manipulated a DOM, so they don't know what the hell they're talking about. It's an order book. So are you going to look at actual transactions where people have actually put cash on the table? Or are you going to look at people who kick the tires? And no trader in his right mind is going to show you their hand in an order book. You'd have to be on a 4-day Coke binge to show your orders in a DOM. It's insane. Yeah, so we're just kind of, we're in a rotation now between 7,006 and this 69.99 level, just back and forth, back and forth. So, like I was saying, Ed, market profile people say that acceptance is 2 half-hour periods over a level. For me, acceptance is how long do you need to handle your business. Right? I don't need to look at the DOM to know that there's a seller at 7,004. Right? It's as plain as the nose on your face. Look, there's a seller here. The sellers are here. 4.5, 4.75. Right? You don't need to look on the DOM and see a big sell order. You can see there's the transactions that prove it. Get it? It's so simple. You know that there's a seller at 7. You know they stop selling at 7,001 and lift the offer. Right? A 1-minute candle chart will tell you way more than all of this fancy quote-unquote order flow software. Order flow software is a marketing term and a scam. So they can get more money out of you and teach you classes on stuff that will never make you any money. Right? I don't know. I'm not a poker player, Rejon, but if you played poker, would you show everybody at the poker table your cards? See what I'm saying? The reason that they can get away with it is people don't understand how the business works. So they're gullible and they'll buy software and they'll buy teaching instruction that's just taking advantage of them. I've watched some of those DOM videos where people are trying to explain the DOM and footprint charts. And I'm like, people actually are believing that these guys know what they're talking about. It's scary. Right? It's absolutely scary. So this is the year where I call out all those people because they're not helping people make money. Right? People have been trading for hundreds and thousands of years before the computer chip. How did they know how to trade? If I gave you the price every 15 minutes, would you be able to trade? No charts, no computers, no nothing. That's how it was, until the late 90s. So, just learn the business. Keep it simple. When sellers are raising price, you go buy a little and sell into it. When sellers are lowering price, you do a little shorting and then cover. Right? If the candles are really tight and small, you sit out. It's choppy. If it's very volatile, you sit out because it's choppy. Right? Just keep it simple. Make some money, go enjoy your life. Instead of looking at things for 25 hours. Come join us at the Trading Syndicate. We'll help you make sense of all this nonsense. We cut through all the BS. And we'll make you profitable. Okay? Thank you so much for being with us. Anne-Marie, thank you. Appreciate all your support. And we'll see everybody tomorrow morning bright and early for Fed Day. Make sure you guys all get hydrated. Thanks, everyone. Have a great day. Stay safe out there. Don't take candy from strange market makers. I appreciate you guys. Bye for now.